us. Abhilash Narayan is Senior Investment Strategist, Group Wealth Management at Standard Chartered Bank. Abhilash, good to have you with us here. Good morning. Are we at the start of a bit of a meaningful cool-off in bond yields in the US, Abhilash, or you think that will depend very much on data like the monthly jobs number tomorrow?
Absolutely. I mean, if you look at the rise in bond yields we've seen in US over the past month or so, it has been very, very fast. And from a technical perspective, the rise in yields looks to be, overstretched, but clearly momentum is towards further rise in yields. So as you rightly pointed out, the NFP data coming out on Friday will be very, very crucial because, as we see, markets are looking at bad news as good news. So yesterday we had the ADP data, which was softer than expected, and we saw both equities and bonds rally on back of that. So yeah, clearly data dependent, but we think dollar yields are edging closer to their near-term peak.
All right. Abhilash, how are you feeling about equity markets like India now for the rest of the year?
Well, I think last time we met, we discussed that, Indian equity markets are likely to be range-bound, and that's what we've seen. Now, looking ahead, we think Indian equity markets are again going to be trading in a broad range because of a confluence of factors. So on one hand, you have the robust domestic growth story, and that continues to be quite supportive, especially from an earnings perspective. But if you look at the flip side, valuations continue to be expensive relative to other emerging market countries. That has been a consistent story. But when we think about the upcoming elections in 2024, there is a risk that we see a bit more outflows from foreign investors. And, while we have seen crude prices decline over the past few days, they still remain, relatively elevated. And that is likely to put further pressure on India's current account. So, modest upside bias, but it's going to be choppy trading ahead for the next few months.
Choppy times indeed. Abhilash, good morning. Give us here, what kind of levels are you looking at on crude? The last time we chatted, we were saying $90 is a little bit distance away. We visited, the higher 90s and we've cooled off from there. So what's the call on crude? And more importantly, the RBI rate cut, that was being spoken about towards the end of this year. That's clearly got pushed back a little bit. So what are you expecting from the RBI?
Yeah, if you think about oil, we think in the near term, oil prices could hover around $90 per barrel, in a range around that. And that's primarily being driven by, the production cuts we've seen from Saudi and Russia, which are expected to continue till December. But if you think about the next 12 months, we think there's a good chance that oil prices come down towards $75 per barrel because we expect the demand from US and Europe to actually subside as economic growth slows down there. And we've started to see signs of a lower petrol or gasoline demand coming through from US. So that should push oil prices modestly lower, but we are unlikely to revisit $50, $60 barrel range anytime soon. As far as RBI is concerned, obviously the spike in food inflation has been the big driver. We think that inflation in print next week could be below 6% as food inflation has ebbed a little lower. But it's unlikely that we'll see a rate cut till maybe Q2, Q3 next year. So RBI is going to be data dependent. So a pause tomorrow probably with the option open for future rate hikes if needed.
I mean, it's quite something, right? Going into the RBI with oil near 100 as opposed to oil a little further away from $100, right? I mean, it's obviously they look at a longer term price data and what's happened over a period of time, etc., not just what's happening day to day. But it's got to have it's a powerful thing. So you think it's a pause, right? With the stance maintained here by the RBI?
Yes, so we expect RBI to be on a pause tomorrow. I think from a messaging perspective, they'll say that they are looking at the data and they are open to hiking rates further if needed. So they'll keep that option open, but maybe the current level of rates is the peak for this cycle if data pans out as expected, and maybe they start cutting rates around mid 2024.
Okay. All right, Abhilash, we leave it at that. Thanks a lot for joining in and appreciate your thoughts here on CNBC-TV18. That's the word coming in from the global expert. By the way, the big headline this morning, of course, is a softening of crude prices. We'll talk more about that on the other side of the break. Our list of top 10 stocks is lined up in just minutes from now. Stay tuned.